Good morning, everybody. Welcome to the channel. This is kind of an intro to the video that Mickey just did, and he's asked me to release publicly as another public release of the course that we're doing right now with him. If any of this stuff tickles your fancy, brings you some joy, brings you some aha moments, or makes you feel you need more of this information in your trading setups, or if you're just trying to learn, please join the Discord for the Pack Trading Group. The link is down below and come learn. We're basically starting the next course, I think mid-July. More information will come once we get closer to that. But main thing is come join. There's free Monday sessions with Austin, and like I said, we'll release some of these free videos every so often. Along with this one, you actually get access to this indicator, which Random made. The idea behind this guy is to help you create your risk parameters, your position size calculator. So we talked about that a little bit in the last video that was released free. This one goes into a little more detail and even gives you some strategies around taking profits if you're in profit, and then leaving runners, this kind of stuff. So lots of great information again in this video. Please take your time to go through it. The idea behind the indicator is you'll put your risk parameters in here. So let's say what your account size is. If you're dealing with a prop firm, for instance, and let's say it's a 50K account and your max drawdown is 2,500, that's your number. You don't put 50,000 in here, you put 2,500, because if you risk 5% of 50,000, that's very different than risking 5% of 2,500, which is what you want to play around, because if you go negative 2,500 on the account, you've blown the account anyways. So take a look at some of the details. He goes through it in detail in the videos that we've released recently, and then you can basically pull this to your entry, pull this to where you want your stop loss to be to kind of clear stuff, and then based on that, it'll tell you how many contracts you can go through. And then on top of that, it even gives you some lines on where you want to maybe pay for the trade. This could mean taking some of your profits off, whatever, because I believe there's some settings in here. Yeah, target daily return, reinvestment rate. So those different things will create those lines for you based on what you're doing. And some of the stuff he goes through on this next video also is kind of how to take some profits in the middle of the trade as well. So yeah, this will tell you whether your TP maybe is too big, too small, whether your stop loss, and as you can see, if you extend the stop loss, then it'll adjust and it'll say, you know what, you want only one contract. And then as you can see with this one, it's going to take you longer, and maybe you won't even have a line because it'll take you longer to get your profits this way when you're going with less risk. So anyways, hopefully that helps. Hopefully this video that Mickey's done will help out. If you guys have any questions or anything, please do come and see us in the Discord. As always, you're welcome to DM me and ask me anything you'd like, and we'll go from there. Thanks so much, guys. Have a great day and enjoy the rest of the video.
All right. So month one, we learned how to build a system, and that system allows us to take individual trades, models, and turn them on and turn them off and adjust the risk per trade, right? Month two, we've been going over 4 generic trades, nothing special about them, and practicing turning them on and turning them off, right? And adjusting risk per trade, right? Probably one of the top 5 most important things you can do as a trader, right? Most people who actually trade consistently profitable or work for big business managing money, right, or have been successful, do something similar like this, right? The dude that's coming in today, Kirsty Macro, like at the reengineering session, he's traded professional prop. He's traded for 5 years. He's traded retail prop, pulled money out of both, proven himself in both manners. Has never been afraid to show month over month, quarter over quarter statement. Doesn't just fucking sell you a false dream with bullshit theories, right? But actually speaks and does exactly what he says, right? So he's going to be good because he's going to come in and he does very similar things that I do, right? And he position size very similarly, right? So he's going to reinforce what we've been talking about for month 2. And I told you, I set up month 2 specifically to filter out all the dumbasses, right? Who are strategy hop. They want a strategy hop, cool. Like, they're gone, right? Like, they get to listen to me speak about stats, how to do the 4 steps in the P12 analysis for a month, and then they eventually faded off into the wind. And now we're going to talk about the real good stuff that makes you sustainable through time, right? So this month are there any questions on, right? How to turn like what we are doing from a trading strategy standpoint, right? It should be very clear and clean, right? We use the daily profile and the P12 analysis to turn our trades on and off and to figure out when that trade is A, B, C, or whatever kind of grading system you want to put on it, right? And then that allows you to adjust how much risk per trade, right? And then what we've been studying this week is based off of, right? Based off of, and if you aren't caught up with this, go rewatch Friday's video or yesterday morning's video because I'm not covering it again. But based off of our compounding return, our daily return for compounding for that account size, right? We know how much we need to make for that day, right? And are there any questions about how we actually position size correctly to maintain, to easily get out of the risk of ruin by taking the account balance and the risk percent per trade, which also calculates the entry versus the stop, right? There should be no, how about this, Hila? Take notes. It's not a hard concept, right? Like, nobody got to like take notes. Just pay attention, right? If somebody records it, great. But most of the time, like, shit, I wish somebody would have recorded my classes when I went to school, but
It's
they didn't.
recording anyways, but yes, I get you.
Like, I had to take notes. I had to show up to class and I had to take notes, right? And then if I got it, I got it. If I didn't, oh well. I better do my individual research now, right? All right. So we know how to properly position size, right? Based off of the stop location from the entry, the risk per trade, and then the account balance, right? So this is a trade, right? Now, right? This is a trade that I'll populate on the screen once we get this part out, right? So we know that our entry triggered right here, right? And this is ES for math purposes. It's easier to do, right? But it's the same concept on NQ, right? We know that our stop right here is because it's the invalidation of the strategy, not because we use structural stops to maintain our risk, right? We put our stop where the thesis of that trade model is wrong, not where it is makes us comfortable with our emotions, right? All right. We do the calculation and tells us, hey, you can afford to enter 6 contracts. Now, how do we cover that risk while maintaining the huge amount of the move that we need to cover, right? Right, without taking all emotions out of it, right? Without, TPing before we're supposed to TP, without, like letting our fear of getting stopped out control when we leave our position, right? The market lets us know when we're leaving the position, right? We do this, right? We set up, partials. Now, partials from a retail standpoint make no fucking sense to me, right? People will use highs and lows. They will use like dumbass places that make no logical sense, right? Why they're taking partials, right? Like, just because there's a high rate there, like, but then I target the daily profile, so maybe it makes sense the time horizon lines up. But for me, when I take partials, it's going to be to pay for the risk of my loss, right? Like, I don't move my stop. Like, this R is accounted for, right? This 217 is accounted for in this model, right? Right? I'd rather get stopped because it's at the invalidation zone where I am wrong for the trade, right? So now, while I'm in the trade, I have to find a way to cover this risk. So this is a risk-free break-even trade without me moving the stop. Well, how do I do that? Right? By taking partials with the right amount at the right location to cover this. Right? So I set it up where half. So half of 6 is what? 3. So if I'm in 6 contracts, right? This is the location using this formula, right? The amount of risk divided by half, which is 3, and then taking that number and dividing it by the tick value, which is 5, telling me 14.5 handles away on the ES, right? So I know if I take 3 off right here, because I'm doing half, right? This 217 is now risk free. And I can let this thing run like it's 954 when I'm taking this position. So now, if I'm talking at 1500 high of the day, I've got 3 that's going to run for the rest of the day up to that 1500 high of the day. Right? And this risk is covered. This is a free trade. It's a break even trade. And this is how you do it without moving your stop away from that invalidation zone. If I want to take a 4th off, right, which is 2 of 6, right, it's like 1 point something something, and we're going to round it up to 2, right? Then I know that my my partial area, right, is going to be right here, because 217 divided by 2, which is a 4th of the position, divided by 5, which is a tick value, right, or the dollar value, equals 14.5 handles. So I know that if I'm trying to pay for this risk right here, that gets covered right here. Right? If I want to take 3/4 of the contract off, right? Same concept, right? 4 contracts, right? Because I'm taking 3/4 of the position of the 6 off, so that's 4. 217 divided by 4 divided by 5. And that is not correct. It should be 10 handles. Let me fix that. Right? And so now let's talk about it just like we had to talk about. Remember when I said wide stop versus tight stop? They all cost the same because the stop's in the location. And like if this is a tight stop, right, it allows me to get into more contracts, but the stop itself is still the same as if I got a wide stop, right? I'm just in less contracts. So the stop price, the dollar amount doesn't matter because it's going to be fixed if you're position sizing correctly, right? If you have a tight stop, you get in with more contracts. Stop is 217. If you have a wide stop, you're going to get in with less contracts. Stop is what, 217, right? But what is affected when it comes to the tight stop versus wide stop? What is affected? What is open? The TP, the reward, the profit, right? Not the win rate. That's stupid. Well, why would you say win rate? That has nothing to do with position sizing, right? So we know from a position size standpoint, the tighter the stop, the better, because we're going to have more contracts. So when it finally hits that 1500, we're going to pull a lot more cash out of the market. But to get through the 14-day risk of ruin, we've got to position size correctly. The same thing goes with these partials, right? When using our daily classifications, right, DWP, DMP, range 1, range 2, how is that going to determine, like, first and foremost, let me back it up, right? So if I take half the position off versus a 4th versus 3/4, right? Which one's going to make more money once it finally hits TP? This one, right? But which one is more exposed to taking the 217 on the chin without covering the cost? This one. Why? Has to go further before taking the risk off. So this has to move 21 handles on ES, not on NQ, on 21 on ES versus 14 versus 10, right? So we know that this one makes the most money, but it also has a possibility of losing. So if we take a fourth of the contracts, right? So this is 6 contracts. But if we take 2 off, we have to wait farther to take that 2 off. So we're exposed that 217 longer, right? So now I want to ask you, right, using the daily classifications, right, DNP, DWP, range 1, range 2, right, which one of these go with what? Right? Let's start with 3/4 of the position gets taken off at the partial area. So we're going to take off 4 and we're going to leave 2 runners on. This is for range 1, right? Why? There you go. Which one can we allow to take off a quarter? So 2 contracts so we can ride the 21 handles on ES. GNP or GWP or the time of day that you're entering the trade, right? And then this is just the half is all in one kind of special. If you don't feel like having the mental brain power to mess with these two, just do the half, right? Right? So now let me ask you, I'll get to that, Arnie, right? So, like, it's 9:54 when we enter this trade, right? Right? And yesterday, if you guys did the re-engineering session wrong, I mean, if you did the re-engineering session right, what did we identify? What did I talk about at the 9 o'clock? You're not trading a lot. The 8 o'clock had a statistical low day for a long trade, right? So I was targeting end of day, high day, right? So now my job is to enter a position at the most reasonable spot, right? Which is a 9:45 to 10 o'clock reversal or 9:30 to 9:45 reversal, right? Well, we knew that we had service PMI and ISM yesterday, so the 9:30 hour is a whole, which is junk, right? Right. So, but we're still targeting either 1500 low day or 1500 high day, right? So, right, let's say we want to, like, we cannot turn on NQ, we can't turn this thing false, right? So we take the position. And when do we trade ES over NQ? Let me start with that. And why? When and why? No, Wagner. When the volatility is too big to accept structural stops. Why do we choose ES over? Because it's cheaper. Greg hit it on the head. So if we're in the 14-day risk of ruin period, right? Like, it makes more sense to trade this. Watch it mess it up. I'll have to come back. But this same location for ES is worth 6 contracts, 217. Right now we're going to go to MNQ. Take the same exact trade. Oh yeah, I gotta adjust the position size. I'm over here like, what is a position size? Right? Remember it was under here. Now we can afford 4 on MNQ versus 6 on ES, right? For the same stop location. And it's worth about the same in this case, right? Matter of fact, ES was at the low. Wait. Let me go back to MNQ to make sure I got it right. MES. So this was below the 53 swing low. and MNQ. So MNQ was the strength leader at this point, right? 53 low, right? So we can see that they're approximately worth similar, right? Stopped risk, right? In this case, right? However, NQ only allows you to have 4 contracts. Now, there's going to be a lot of times volatility was pretty hand on hand yesterday between ES and NQ. The majority of the time, what you'll see is that, especially the higher up in position size you get, that ES will be cheaper, right? So your job is to figure that out. Why is it better to trade 6 than 4 when it comes to taking partials? Right, so this is worth 26 points. The other one was worth 7 handles. No, think about what we're talking about. Let's go back to MES. Think about what we're talking about. The pay line is closer, exactly. Right? The pay line is closer, and you have more to stay on your contract for the trade itself. Right? So sometimes it makes a lot more sense because a 25 handle stop on NQ only allows you to have 4. So what's a half of 4? It's 2, right? So I'm only going to have 2 runners on versus like if I want to do a fourth, 3/4, or a half. Right? So let's play this out. Let me back up real quick. All right, so now, what a cocksucker. There we go. No, come back, you. Come back. Bye. All right, and we're doing the half, right? So once we hit this partial area, we're going to take off 3 of these. Now we're going to sell 3. Right? And our risk is covered now. So now we have 3 contracts, right? And now we can ride it out to the rest of the day, right? Or get stopped out, right? And then now you can just sink it in with your 10 o'clock captain back test, triggered longs, 3-hour quarters, triggered longs, right? Et cetera, et cetera. Does that make sense? Right? All right. Are we starting to see, right? Why the position management and how much your position sizing and when you take partials trumps all freaking strategies. Right? Your job is to stick like when it comes to strategy management, it's your job is to know when to turn the strategy on, off, and when you're in an A plus setup, so you need to increase your risk per trade, decrease your risk per trade, or take no more risk. Right? But at the end of the day, right, it's not that fucking hard, right? Can I please repeat what? What do you want me to repeat?
I believe it's a joke.
Oh, I mean, I don't mind repeating it, but no, I don't think she's joking.
Oh.
You may repeat because I talked about a lot of stuff. Huh? There you go. I'm confused. Okay, Greg, great question, right? We do add the positions, right? We re-add the positions, right? So what got triggered here out of all the models, right? This is the 3-hour quarters trade going up, right? 945 reversal, etc., right? This triggers captain back test, right? Longs. So now I can add back 2 doing captain back test, or I can add back 2 going New York 2 going long, because at the end of the day, what is my higher objective? My higher objective is higher day into day, right? So like the way I break my days down is 9:30 to 10:30, right? Even actually I'd say 8:30 to 10:30, right? I'm targeting retracement data like midnight retracement. I'm using P12 blah blah blah, but there's a shift in my mindset that happens around 11 o'clock that says now you're targeting the afternoon, like midnight retracement, settlement, like all that is noise now. Now it's time to figure out where the high of the day or the low of the day or the daily classification is going, right? So you're constantly turning systems on and off, right? No, no, ask about it, Vega. I want to make sure you know. Like, just be very clear. Do we? Okay. So, right? So, like in this case, I have 2 options, right, left on the table for me, right? Actually, 3. I have 11 o'clock quarters. If it makes a Q1 low and statistical Q high that I can add to the position, I have 12 o'clock, right? That's going to reset the 3-hour quarters. So 9, 10, 11, 12, 1, 2, right? To push towards that end of day high day, right? Or I can do captain back test, jump to the 10-minute chart, wait for the pullback, enter that way. Or I can wait for New York 2, right? And tie it into the quarterly trades that add to that position as well, Greg. Right? But my thing is like, do you guys understand how to establish and pay for the trade without having to move your stop? Right? Because that's what we're covering today. And do you see how it's synchronized with how to properly position size? So why this is important, why this class is important, is because remember, the most important thing that we're doing right now is doing our daily compounding. Right? Remember, right? Like we went to daily compounding, daily interest. We started with a $4,000 account. All right. We want to make 3% risk per interest over the next 100 days. We want to reinvest 100% and not pay ourselves yet. Right. And our start date was April 1st. Calculate now. Now, remember, we don't consider this. We don't consider this by days. We consider this by what is our balance and did we win or lose that amount for that day or that trade. Like you can do this not by day but by trades, right? So if you're doing the quarterly trades, like 1, 2, 3, right? 3 quarterly trades in one day will get you this much. You move up the ranks this much, right? So now we are right here, right? So I know my $4,000 account that I started with, and on April 1st is now at 7414, meaning that I definitely lost a couple of days where I had to reset, right, and go back a level, right? So today I have to make 216, right? Right, 216 for today, right? So now, and then you do it, you can set it up however you want. Like I've got it set up right here just for teaching purposes, right? So being able to cover that 217 that was on risk for today, right now, that's covered, and I can focus on whatever I make with these 3 contracts will go towards that 217, and then I walk away to the next trade or the next day, right? Depending on how your business plan is doing compounding. If you're doing the compounding with multiple trades a day or whether you're doing a 1-day compounding goal. All right. Is this making sense? Carl Hungus, do you want to jump up? Carl.
What's happening? Yeah, what's happening?
Does this make sense to you how we identify? Huh? Because I want to make sure you get it, because if you get it, then it'll make what you're about to teach, if you can teach that today, that'd be great. What you're about to teach that much sweeter. But does this, how to establish your partial to cover your risk, make sense?
Oh yeah, absolutely.
All right. So before, are you able to teach today? That thing that we were talking about, your Dell?
What, just the thing I shared with you with ChatGPT?
Yeah.
Yeah, I haven't even implemented it yet. I haven't back tested it yet, but I can talk about it, sure.
We can start talking about the theory, and then I'll actually go through and back test it. But it's kind of a compounding strategy within itself. Back to this before I hand it over to him, right? This will be coded into this position size tool, right? A couple updates with this position size tool. So let's exit out of that trade. Let's turn off this. Let's rewind back to here. Right, so you see how based off of your account size and your risk per trade, it tells you how many contracts you can afford based off of where the stop location is. Right, if you're over leveraged, once the update comes out, it will tell you don't be a fucktard. Right here on the thanks man. It will tell you right here where it says entry is 4 contracts. It will say don't be a fucktard. That's giving you a warning on your chart that you're breaching the parameters of your risk profile. Right? Now, and I'm not changing it. So if you're a Christian or you don't like cussing, this is Daddy Mickey saying don't be a fucktard. Alright, and then these pay lines, right, will be updated on the indicator where you will have the option to, based off of whatever contract, so this is 4, right? If you select half, 1 quarter, 3 quarters, it will automatically show you where the partial zone should be, where you should be, where that should be. Does this make sense? So that's all going to be updated into this script today. All right.
Hey, Mickey, can we do this tomorrow?
Yeah.
Can we do it tomorrow? I'm fucking. I just woke up. I'm exhausted right now. Sorry.
Yeah. We no worries, man. All right. So, with that being said, right, to move forward, right, we're going to talk. So we've talked about how to properly position size. We talked about risk per trade versus fixed contracts, right? We talked about stop locations, right? We talked about the TP being incorporated into the model, right? We've talked about how to take partials properly. We have multiple systems that will allow for us to add the winners, right? We've covered the risk profile part very, very in detail. So, right, now what we have to do is practice, right? We have to practice over and over and over again, right? So how do we practice? Right? How do we tie this into individual strategies? Right? How do we do that? First and foremost, how do we understand where the TP and the stop loss goes for a strategy? Right? How do we figure that out? Just any strategy. Okay, we can use historical data. And where's that historical data? We collect all this historical data. Yay. MFE, MAE. Exactly, Wagner. MFE, MAE, right? So, right, we use our historical data to figure out, like, this is the average area where it goes before it turns around and goes to this area, right? So our stop location can be around there, or we can use the 50%, the median. This is the median of all locations where the stop should go, and this is the median of all this data that tells us where the TP should go, right? All right. Right. If we can merge strategies, right, like right here, right, we've got a 945 reversal, right, off the 930 price, right, establishing the low of the day, at least for NQ it was, right? We take the position here, right? We take our 6 contracts, right? We set our stop loss, right? I get it's 4 because it moved up, right? We take it to the pay line, and that's obviously going to be wrong because I didn't enter at this exact location. All right, but it covers anyway, right? I don't want to erase it. Did you guys screenshot this? All right, cool. Yay. All right, so now we know when to trade, right? Now we have Captain backtest, right? So that we can add to this position, but we have to do the same concept, right? So for our highs taken out, telling us we can only enter longs now, and we're expecting a DWP or DMP to facilitate Captain backtest, right? So now we have a pullback right here. So we know we need to close above this. We also know that, you know, we're in the 10 o'clock hour and that 11 o'clock might give us the entry. So now we can't enter yet. We have to put our stop right there. Why do we do this part? Now we can enter because we closed above this high, right? So now we can try to position ourselves back into position right around here. But what do we have to do? What do we have to do? We're in position here, right? This stop is covered, right? If we're going to add to this overall position, because this is great pricing, right? What do we have to do to like figure out the partial zone for that second contract? So now we have permission to enter. What do we have to do to figure out the same concept? Because like, let's say this is the 10-minute close, right? We have to redo our stop location and think of them as individual collective points. Right, where's our stop going to go right here? Well, we're about to go into a new 15-minute, right? So it's got to go below this 15-minute high, right? And then we're going to wait for the next hour to grab the low in response to this previous hour 50%, right? Or we can take it right here blindly. Well, if we take it right here blindly, we can enter 3 contracts, right? 3 more contracts on top of the 3 here. So, right now, what we're going to have to do right? Like, let's say we take it like idiots right here, right? And now our risk for this new position is 195. So now what do we do? Are we going to take a half? Or are we going to take, well, you can't, it's either a half, you have, because it's an odd number and it's a low number, we have to figure out how to cover this. So we're going to take 2 contracts off of this initial position. We have to figure out the pay line for it, right? So how do we do that? Y'all remember? Let's bring up the calculator. We know that we're going to take 2 contracts off. Yes, 2 contracts off this risk. So it's going to be 195 divided by 2. All right. Right. Divided by what? So we got 97. 5. Why 5, Arnie? Yes. 5, right? So we know to take 19 handles to the upside, right? So now, is it even worth risking this, right? Is it worth it, right? Or is it worth, like at this point, this is exactly what Captain Backtest tells you to enter, right? You have permission to enter, and this is the most logical stop location, right? Is this even worth, taking the trade right here or waiting? No, think about it. Like, should we take the trade exactly when the model tells us, all right, why should we wait? We have 11 o'clock hour coming up, and we can get our risk close to this or this 15-minute low or around this previous hour 50%. Right? Because 20 handles on ES, especially during lunchtime, is a lot. A lot. Better entry, more contracts, easier to Wagner, student of the year right there. Exactly. So we don't just add into winning positions because we can. Because this is a perfect example of, like, I'm exposing myself. Remember, we had 3 contracts here. I took it off just to show this part. Like, it doesn't make sense for me to add right here. It makes sense for me just to let the 3 contracts I had around 930 price right here just continue running, right? Because I can't. Because if I expose myself to this risk right here, right now, my partial zone to pay for this risk is 19 handles away when we're about to go into an area where we know the market volatility contracts for that part of the day. Are we starting to get aha moments? So we wait. Last 15 minute, new hour. And of course, there we go. Now, what could we do right in this zone? Right now, we can think about entering here because we know this is a 15-minute, so we can slap our risk of that position that we'll add and really tight to the previous 15-minute candle low. Right now, we have an area, even though it's not like cool right here, right? Our risk was too much that we couldn't pay for it. Now we have a new hour, momentum shifted high, as that we can adjust that risk to, right? To target that end of day high day. Right? Arnie, what are you talking about? You want to come up and I want to hear what you have to say about that. Just the math wasn't math in me. Because everybody in this industry tells you, right? Tight stops versus wide stops versus tight stops. I just showed you how to position size to calculate for both. Everybody tells you strategy this and strategy that. I just showed you how to pay for your trade so you can actually hang on without the emotional attachment of that trade. All right, what's up, Arnie?
Hi. Yeah, so it's nothing special. It's just that I've been doing fixed positioning like 1-2s, 1-3s on strategies, and now I'm loosening that up already before this course, but as you say, MFE, MFAs, those should regulate when to put on size and how tight I should require my stop put to be, because I haven't really looked at that. And there's so many new dimensions opening up. So
Good.
it was a bit harder than I have discovered so far.
Yeah. Do you see why I'm telling you, like, I don't want to take the strategy. I don't ever want to take the aha moment of your trading model. But whatever aha moment, like if you're an ICP trader, right? I want you to continue trading your models. If you're a DR trader, keep trading your models. If you're auction theory trader, keep trading your models, but know when to turn the trades on and off, know how to grade the trades so you understand the position size and the risk per trade. But this stuff that I'm teaching in month 2, right, facilitates and makes all those trading strategies that much easier. Right? The last class when I was teaching this, like they had a lot of good aha moments with this. Like, but I do teach it month 2 because I am trying to filter out the noise of students who are just strategy hopping. Right? That's why I tell you guys to hang on and come to month 2 and then learn how to apply the risk component and the strategy component in month 3. Right? That's the most important part. And then just like anything else, right? Like, building the business plan around it that you can facilitate. Not me, not your friend, but you build a business plan that you can maintain discipline towards. Because if you can't do that, then this is all a waste. And you should stop trading. And that's one thing most people won't tell you. I will tell you, if you can't do it this way, you're never going to be successful. Stop wasting your money and time and stop trading altogether. Right? At some point, even in your business plan, that should be defined. Like, when do I just give up? Everybody's all about don't give up, don't keep going, right? No. Like, shit ain't for the faint and weak of heart, right? A lot of people should give up. A lot of people should quit, right? A lot of people do prematurely quit before they give it a chance, but they usually fall under bullshit mentors, and it just extends their freaking failure rate. But certain people will turn this into a gambling addiction, or certain people will never be trained correctly how to manage risk, the risk profile aspect of it correctly, and they should absolutely give up because they are taking away from their families. They are taking food out of the family's mouth to maintain this hobby. Because that's all it is. It's not a business plan, because until you make money month over month and quarter over quarter, it's just taking money out of your pocket, your hard-earned money that you're spending, that you're working for. You're just wasting it. So that's why I tell everybody in the beginning, right? In the beginning, your job is to lose the cheapest. The cheapest way you can lose, you have to lose, right? Proper counsel is the cheapest way right now that a trader can lose while figuring this out. Y'all should be in the prop space. Do I spend $150 a month or $50 a month? Do I buy a 150K account versus a 50K? Well, you probably should buy the 50K account because you haven't even proven that you even know your business plan, or you even trade your business plan, or you even care about your business plan. So cheapest way to lose, $50 account. Right? But at some point, you got to make the decision, am I going to take this as a profession, or am I going to do this for ego, clout, and fucking nonsense? All right. Thanks, Neil. All right. Any other questions? Because I'm going to jump. All right. Sounds good. Later, haters. The script will be updated by the end of the day. All right. Later.